Welcome to Procure to Pay Process Flow. In this lesson, we're going to cover only one objective, which is to identify the steps in the Procure to Pay process flow so that you understand how requisitions, purchase orders, and vouchers work together. This is the entire Procure to Pay process flow. It incorporates both purchasing and accounts payable and includes the use of requisitions. Step 1 is creating a requisition and submitting it for approval. This includes Georgia First Marketplace requisitions and special request requisitions. Once a requisition is submitted into workflow, the approver either approves or denies the requisition. If it's denied, the process obviously ends. Once the requisition is fully approved, it's then available for further processing. The first processing stop for an approved requisition is to budget check the requisition. When a requisition is budget checked, the system creates a pre-encumbrance for those funds. If the requisition passes budget checking, it is then sourced into a purchase order. Georgia First Marketplace requisitions are automatically sourced via a batch process into purchase orders. Special request requisitions are manually sourced into purchase orders. After the purchase order has been created, it is budget checked. When a PO is budget checked, the pre-encumbrance created by the requisition is relieved and an encumbrance is created. Once the purchase order has a valid budget checking status, it is then dispatched to the vendor. If for some reason changes are needed to the original purchase order, the purchasing office will create a change order, which will be dispatched to the vendor again. The process then picks up when the institution receives the goods or services. If receiving is required, then the system will need a receipt before payment can be made. In addition to the goods, the vendor also sends the invoice to the institution. Some Georgia First Marketplace vendors may send invoices electronically, which are known as e-invoices, while others will send them in the way they have always sent invoices. Once the invoice arrives, the Accounts Payable Office creates a voucher to pay for that invoice. Vouchers are created through the voucher build process for e-invoices from Georgia First Marketplace vendors. After the voucher has been created, matching is run on the voucher. This matching process compares vouchers with purchase orders and receiving documents. Its primary purpose is to ensure that you pay only for the goods and services that you order and receive. In addition to the matching process, document tolerance is run. Document tolerances are allowable percentages or amounts by which related procurement documents can differ. The document tolerance that is run at this stage is between encumbrances and expenses, or between the purchase order and the voucher. If the allowable percentage or amount is exceeded, the system creates a document tolerance exception. State of Georgia requires that a PO change order must be issued when invoice totals vary from the PO by 10% or $500. The voucher is also budget checked. When the voucher is budget checked, the system relieves the encumbrances created by the purchase order and creates the expenditure. After the voucher has been successfully run through matching, document tolerance, and budget checking, it is ready to be posted. By posting the voucher, the system is able to generate vouchers automatically using the journal generator. Posting vouchers in PeopleSoft Payables updates vendor account balances and creates balanced accounting entries for all distribution lines entered for vouchers. After the voucher is posted, it is then available for journal generation. The journal generator posts these accounting entries to your general ledger. In addition to posting vouchers, you must also create payments for them by running the appropriate pay cycle. The payments are then posted in Accounts Payable, which updates vendor account balances and creates balanced accounting entries for all payment-related transactions. Once these accounting entries are generated, they are also available for General Ledger Journal generation. Once payment has been made, you can then reconcile the purchase order. Once a purchase order no longer needs to be modified and has been dispatched and received, it must be reconciled and closed. This involves analyzing receipts against POs so that the amounts on the PO can be closed. Only POs that have amounts that are completely received or canceled can be reconciled and closed. When ready to close or reconcile POs, you can do so through the PO close process or through the PO reconciliation workbench. After a purchase order is closed, budget checking must be run on it in order to liquidate any remaining encumbrance balances on the closed POs. Once a purchase order is closed, then the associated requisition can be reconciled against the PO and closed. This is done when a requisition has been fully canceled or fully sourced and no longer needs to be modified. You can close requisitions through either the requisition closing process or the requisition reconciliation workbench. Once closed, requisitions have a status of completed. By closing requisitions, you can also enable commitment control to liquidate any pre-encumbrance budget amounts for outstanding requisitions by budget checking the closed requisitions. And that is the overall procure-to-pay process involving requisitions. Many of the steps in this process flow are automatic depending on the requisition type. Some, however, do require manual processing. Business processes for each step of this process can be found on the Georgia First website. This concludes this lesson on the Procure-to-Pay process flow. Return to the ePro Georgia First Marketplace training page to access additional lessons. If you have further questions, please contact the ITS Help Desk at helpdesk@usg.edu. Thank you for attending.